Welcome to Wise Up Governance and Boards podcast, brought to you by 3 Wise Owls Governance Consultants. Covering hot topics in governance, risk, latest regulatory changes, and issues keeping directors and executives awake at night. Here are your hosts, Ainslie Cunningham and Deb Anderson.
Welcome to another episode of Wise Up. Today we are joined by David Johnstone. David is an experienced executive, non-executive director and chair who has been actively involved in business for more than 35 years, successfully starting, owning and operating a vast range of businesses, with experience gained nationally and internationally in tech startups, selling, licensing, merging and acquiring businesses, having also arranged funding for management buyouts, along with the successful placement and listing of companies on the London Stock Exchange and the Australian Stock Exchange. He is a keen investor, chair and advisor to various technology companies in the communications, finance, insurance, risk management and sporting sectors, which are investing and advancing technology to the forefront of their respective industries. Welcome, David.
Thank you, Deb.
Yes, welcome.
Thank you, Ainslie.
That covers just about every industry, doesn't it?
Yes, it does. In listening to that, I like variety in the businesses that I get involved with, rather than being focused on one key sector or one key industry. So hence the 4 to 6 industries that I've been involved with.
So what was your first executive role on a board?
My
non-exec?
A non-exec role. There was plenty of exec roles, from starting my own businesses. But really my first non-executive role was with a group out of New Zealand called Ginger Group, which was a financial services dealer group.
And in Australia?
And here in Australia, my first appointment as a non-executive chair was with GPS Wealth, which was another financial services dealer group, but obviously based here in Australia.
So you've moved out of financial services more recently into technology?
Yeah, I've found, especially in environmental technology and in sporting technology, they've advanced very quickly over the last 10 to 15 years, and so that has that struck an interest for me. So I've pursued a couple of investments in both those types of companies. So and therefore moved into non-executive roles and non-executive chair roles with those sort of companies.
So tell us some of the advancements in that sporting sector tech space.
Well, really, it's the grassroots sports that really are challenged with being able to manage their administration because they're all there as volunteers, and you've got to find a technology that people who are not the best with technology can embrace, and that it's affordable for the clubs. So that's a challenge in itself. But the advancement really has been around managing the statistics, managing their communications with their members. And once you can get that communication right with your members, it kind of snowballs. You can get more and more members. So they're starting to really rely on apps and platforms to be able to manage both of those areas for them.
And how are you finding the stakeholder engagement in that space? Are you finding that communities are really adopting that? Again,
some communities are, and it really is sports-based around that. So probably the sports that have the hierarchy of professional type environment, professionals in their sport, they seem to adopt the technology a lot better than those kind of grassroots sports that don't necessarily have national teams and supported teams.
So you're chair and NED of Envirosuite.
Yes.
Tell us a little bit about what they do and how you've sort of coped with COVID.
Yeah, that's I could probably nearly write a book about Envirosuite. It started off as a group called Pacific Environment, which was the merging of 3 to 4 environmental consulting firms, and then they listed on the ASX. They didn't do terribly well as a listed company on the ASX. Then they decided that they needed to do further mergers and acquisitions. So I got involved with the business to assist them to do that, but from a non-executive director level. It came very clear that they had this excellent piece of technology, which was effectively around air quality monitoring. And there was a desire in the business to grow that into a global business, but we had this consulting firm that was driving most of the revenues. So we finally made a decision to divest ourselves of the consulting business, and that was a national consulting business, and then focus on building out the technology. So we spent 2 years developing the technology, testing it worldwide, mainly in mines and wastewater treatment plants, and it was becoming quite successful. So we went out and raised some more capital. Along the way, we got involved with a group called Bell Potters out of Melbourne, who assisted us with I suppose at that point our second largest capital raise. And then we went out and acquired another business, one of our competitors in Canada, called Odotech, and rolled that into our business. And with that came some really good clients. So we just continually developing the technology out, listening to the customer base, understanding what solutions they needed for their businesses. We grew that business from, after we divested ourselves of the consulting firm, from 1.5 million in annual reoccurring revenue to the next year to 3 million, to the following year 6 million, and then a target for this year was 12 million in reoccurring revenue. Mm-hmm. So some heighty goals there. Very challenging when you're trying to do that throughout the world with only 60 people in about 8 different countries. And then we came across a group who we'd had a chat to a couple of years ago in October of last year. And that business is called EMS. It's about a 30-year-old business that had been focused in noise and vibration monitoring. Their noise monitoring is predominantly in airports, and so they're in 200 airports throughout the world. They're probably the largest monitoring group in the world. So we thought, well, we can bring these two businesses together. So in November last year, in 2019, we started the process of, after we'd negotiated the deal, the due diligence and trying to finish the transaction before Christmas. We couldn't finish the transaction before Christmas. It's just too difficult, too short a time frame. So we reset for a couple of weeks, and then we settled on that business on February the 28th, 2020. It was, their business is 5 times the size of our business.
Wow. And
we, the transaction, total value of the transaction was 100 million. So we had to go out and raise 80 million from the markets in late January, early February. That was we were very successful and oversubscribed for that, but it was a significant challenge because we could see the headwinds of COVID-19 coming at that point in time. Markets were under pressure, but we had a very good investor base that were supportive. The current investor base that were very supportive of us and could see that this was a great transaction for us. So we settled on that business, as I said, on the 28th of February 2020. 2 weeks later, the world went into lockdown. We had to integrate those two businesses, EVS, Envirosuite, and EMS, virtually via Zoom. We had a great team. Our CEO and executive team did an excellent job of doing a 90-day integration, which just effectively finished end of May only a week or two ago. And again, they did did a virtual integration. We hired an integration specialist team out of Sydney to manage it, which it's so important to outsource those sort of things rather than try and do them yourself. You should get experts in to do that. That allowed us to move very swiftly and for our team to be more focused on the operations rather than the integration of the operations. So we were successful with that. And now we sit as just a market cap of over 200 million, and we were just were entered into the All Ords last week, so in the top 500 companies. So it's been quite a journey for 6 years. I started off as an non-executive director there, and then moved into the chair about 3 years ago.
And how are you finding, it's maybe too early to tell, but now that the dust settled on the integration side of it, are you finding there's some synergies there that you anticipated yet, or is it too soon to tell? There is some synergies. We did a cost out program where we took $11 million out of the combined businesses, and then there'll be further cost savings going forward. Unfortunately, some of those were staff that were duplicated, but it wasn't only staff; it was systems and processes as well that were duplicated.
I think quite a few businesses have had to, unfortunately, lay off staff because of COVID anyway. So when you're trying to integrate two businesses at that time, it makes it even more challenging, doesn't it?
Yes, it did. The management have done a really good job with that. We again outsourced HR, so that we at that point had an HR consulting firm come to us and assist us in that process, so that we'd dot all the I's and cross all the T's. Because the business now is effectively in 200. There's 250 employees. We're in 11 countries across the world, so we're truly a global business, and we're very excited about our future.
Have you found that globally, like in terms of Australia, we've had the JobKeeper and kind of those sort of stimulus packages that alleviate some of the financial pressure. Have you found that any other countries are reciprocating in that regard, or?
We were one of those companies that were fortunate that our revenues haven't dropped to the levels that they need to to gain the access to the JobKeeper and so forth. And we did the management team did some work in the countries that we have, other countries that we have staff in, and we didn't qualify for any of those.
And how are you finding the teams all operating remotely? Is that going well, or?
Yeah, look, it's been a really good lesson for not only boards, I think for management, that if you're outcome based, you can get those outcomes without having to be in an office environment all the time, and especially under these circumstances when you're trying to merge companies. I was very concerned that we wouldn't be able to affect it in the 90 days that the team had given themselves. But I think our focus from the start was on the well-being of our staff, and I think by doing that and building a resilient culture, I think by doing that we hit the 90-day period that we wanted to integrate those businesses, and most of the staff are coming along for the ride now. It's a bit difficult for a CEO and the management not to be in front of staff and talking to staff and just chatting with them. They're on Zoom calls all the time. So that was and the same from a board's perspective. I like to be involved with the executive team. Not manage them, just involved with them. And if I'm involved with them, I feel that you get more out of the management teams. Now, we haven't been able to do that. We've had, I haven't met one of the management team face to face, for example.
Wow.
Hopefully that'll happen once our borders open shortly.
Did you share anxiety?
No, it's been okay.
Yeah.
We just hired a new COO for the group, and that was all done via Zoom. So he met the CEO once right at the end of the process, but we went through a worldwide recruitment search for a COO. Picked up a great gent who was working in Silicon Valley and moved back to Melbourne. But yeah, that was all done via Zoom. So that was an interesting process to go through.
Yeah, very.
So presumably a huge part of your operations are overseas?
No, actually, EMS and EVS, so EMS, the business we acquired, their head office was in Melbourne. So they had about 90 to 100 of their staff based out of Melbourne. So our business, our biggest group of employees were out of Sydney. So Sydney, Brisbane. So we've got Brisbane, Sydney, Melbourne offices, and then most of the others, some of them are satellite offices, and then there's a lot of staff that from the noise part of the business with the airports are actually in the airports operating the software at airports.
What's the noise levels like at the airports at the moment? Nice and slender,
very low, not many complaints. And that's so complying with the regulatory requiremts for airports is it's always difficult. It may have been made a little bit easier because of the less amount of planes. But I think everyone's got used. The communities have got used to no noise in the sky. So it'll be interesting when we're back to full capacity of flights around the world. I think the complaints levels will be a bit higher than what they are today.
Same with the air quality too, with those places that are
yes, that's right.
usually polluted.
Yeah.
I think there's fish back in the canals in Venice
Yes.
for the first time in a long time.
You can see through them now. A lovely blue colour. So in terms of noise pollution and now air pollution as well, what's next on the horizon for Envirosuite? Are you just going to bed down this current transaction, or what's the long-term strategic vision?
We've probably two parts to that question. We've made it clear to the market that we've got a goal to have 100 million in revenue by the end of 2023, with about a 15 to 20% EBITDA. So that's our financial target for the business. So there's likely to be a couple of smaller acquisitions along the way that bolt into the business. We're really focusing in air, noise and water. And so when you look at air, we're talking about air quality, we're talking about odour, we're talking about dust, and we're talking about the weather. And we're talking about historical, real-time and predictive in those areas. In noise, it's really noise and vibration. And in water, we're talking about wastewater, water quality, water flow, groundwater conditions. So in the wastewater and water areas, we have done a couple of tuck-ins of technology that suits our technology, so acquiring a smaller firm and rolling their technology onto our platform, which then enhances the solution for the end client. So that's been very successful. So we'll be looking to do more of that, and probably just leave it to those three key areas at the moment: air, noise, and water.
And are you finding that there's an increased focus on climate change targets?
In what sense? Sorry, Ainslie.
In terms of air quality and things like that, is there that sort of environmental sustainability target in terms of specific CO2 emissions and?
Right. Yeah. Okay. Yes. Definitely. I mean, look. The larger companies, larger mining companies, are very focused on assisting the communities and making sure they're complying with the regulations, and that's worldwide. And they've been on that had that focus for many years. So we assist them in those areas and getting them more engaged with the communities on the practices that they're deploying, so that they can manage the air quality and manage when their mines are blasting or so forth. So.
Yeah, I think because there's been such an increased focus for so long from the United Nations, etc., and with sustainability targets set many years ago, companies have had to be, some of them have had to be dragged along kicking and screaming for the ride, where they haven't wanted to be an early adopter of carbon reporting or... Yeah,
there's certainly some companies like that. I think a lot of the companies we work with have that social license, and they truly want to make sure that they are engaging with their communities. They're employing people from those communities, and they're also got regulatory pressure to make sure that they do the right thing in those communities. So I think that assists in climate change, or will assist with climate change.
So with the recent volatility in the stock markets, how has EVS performed?
Oh, look, I think that the market's looking at us as a wait and see. I mean, we did buy a business that it was its major source of revenue was from airports, and then we went into COVID lockdown worldwide. I must say that our clients are the airports who are still operating and still need our software to monitor noise and vibration, but they're not the airlines. So they're monitoring the airlines, and obviously most airports around the world are still open. So I think from our point of view, it's been a wait and see till we get this integration done. We've been able to achieve that in the time frame. We've now announced to the market our financial targets. We're talking about being cash flow break even or cash flow positive by June 2021. So we believe we'll hit those targets. So now it's just getting confidence in the new sales that are coming through, that are occurring, and I think we'll be very solid as we move forward. But certainly, it's had an effect on everyone's capitalisation or market capitalisation.
And have you had to hold any virtual or hybrid meetings?
Oh,
AGMs yet?
No AGMs, but board meetings. Yes, absolutely. I think the first one was extremely challenging. With the EVS, we have a director, Mr. Zhang, who lives in Beijing and doesn't speak English, or very little English, and so we had a translator in with him, and then there was one in Sydney, one in Brisbane, one in Melbourne, directors, and it worked pretty well, but it was pretty slow because we were waiting for the translation process to occur. We found then at our next board meeting the best thing to do was for Mr. Zhang and his translator to actually have all of us on mute, and they translate as we were speaking rather than waiting till we finished speaking and then translating, because it took double the time, the first board meeting. But yes, plenty of, I've had reasonable amount of board meetings under Zoom. They're effective, they're quick, much quicker. You get on with the business a lot quicker. But you do lose that personal interaction.
Have you had to increase the frequency?
Probably not of the set board meetings, which we'd have a set board meeting. Most of the businesses I'm involved with would have a set board meeting once a month, but certainly off-the-cuff meetings, especially through the first month of the COVID-19 lockdown. It was very critical that the board got a handle on what's happening with our revenues, what's happening with our staff, how are we setting our staff up, are they comfortable? The welfare of the staff is so important to just personally and to get the right outcomes. So moving at that point in time 320 people worldwide into their homes effectively was challenging for our IT team, but they did a great job and it worked effective.
And how are you finding staff coping at the moment? Are you having more regular meetings with staff, or it's probably more of an exec question?
The execs are regularly, having team meetings. The CEO and the management team less now with us. It's more they're focusing on business as usual, building out the right strategy and the right business plans for the future.
And in terms of some of the listings that you've had in the past and your experience to date, without naming any names, of course, is there any sort of really great examples of where you've seen things done well, or with the benefit of hindsight, would you have done something differently?
Yeah, I always think that. So when you do, I think it's, and this is around transactions. When you're acquiring a business, I always think that people perhaps who are dealing on the transaction get too close to the transaction and believe in it too much, and so that's where a good board can sit back and question the management's discussions or negotiations around that. So I think you can always do that better. So I think the board has to have less involvement early on in the transaction, other than questioning what the management are doing. I think we found that with this last transaction that we did with EMS and EVS. That's critical. The other piece is around that the board's there to do a job, and they're there on behalf of the shareholders, and the management are there to do a job, and they're there to manage the company. And you've just got to be very careful that boards don't get too involved in the day-to-day management. And through COVID-19, that can happen, and I've seen it happen in businesses, and I could see it happening perhaps in a couple of the businesses that I'm involved with. So I was trying to make it very clear that there's a distinction between a non-executive director and the management. And I think that's where a lot of boards fall down. They get too involved in the business day to day rather than looking at it from afar. However, the CEO and the chairman, their relationship is extremely important. I mean, a lot of people say, you can be friendly, but you can't be friends with the CEO. I don't really believe in that. I think you can be friends. You don't have to be the best friends, but you've got to be friends. You've got to work together, and especially through these times like COVID-19. So having a really good relationship with the CEO is important. I don't think you should be too far apart, which in my experience, some chairs can be well divorced from the management and the CEO.
And it's really about strengthening that relationship to have respectful challenge between each other, really, isn't it? It's the conduit between board and management.
Yeah.
Especially in these challenging times, the execs rely on the experience of the board.
Yeah,
to guide them,
mentor them, and steer the ship from afar. Right? They get too involved in the weeds. That they can't get out of the weeds because they're focused on the business, and whether to just kind of question, well, is there a better way to do that? Can we help you do this? In our experience, we've done this in the past.
And I think too, the bigger the company and the more they grow and scale, the larger the gap grows. It's sort of where businesses are a lot earlier in their life cycle, or they might be a lot smaller in size, that there might be more involvement from, say, an advisory board perspective, where you might just have a founding director and you're not really of the size yet that you have a full implemented management team. So there is kind of that pilot board scenario earlier on in the life cycle of a business. Do you find that?
Yeah, it's a real challenge for businesses, whether they're fast growing or medium or slow growing, that when they get to a certain size, it's generally the founder or a couple of founders and a couple of key people that have been able to build the business to a certain level, and then they look around and go, okay, well, should we be getting some outside advisory help if they haven't already done that from a board advisory point of view? And now we're being told we need to put in all this corporate governance, and now we're being told we need boards and all of that. And that's a really challenging thing for a business. And I suppose, to coin a phrase I use, it's corporatising the business. And that's really one of the biggest challenges I think businesses find, jumping over from being an entrepreneurial founder's business to now a business that requires a level of corporate governance and a level of strategic output and input from a board.
Yeah, absolutely. And I think too, a lot of tech startups find it challenging from a VC perspective when, they wind up in Silicon Valley and realise that venture capital firms don't even want to look sideways at them without some of that sort of corporate governance infrastructure in place. And they then sort of, I guess, get a second education on the fly where they're having to work out what it is and then how they can actually implement that in a hurry to gain access to capital markets.
Yeah, that's quite right. And that's probably the majority of them. The sports technology group that I'm involved with, the two founders from probably the start realised that they needed to bring in a level of corporate governance, a level of board advisory, and were very open to it. So there's a percentage that know that will be helpful to them rather than a hindrance to them.
The real don't know what you don't know scenario.
Yeah.
So ASIC last week came out with a new information sheet around executive variable pay. Obviously, with COVID, it's one of their focuses. They're looking at, obviously, lost employees losing their jobs, costs are down, revenue's down, trying to revisit that variable component of executives, trying to keep the executives engaged. How are your remuneration committee sort of looking at that?
It's
always a challenging one.
It's always a challenge.
Isn't it?
Yeah, it is. And for example, we've just put in a new executive remuneration schedule or plan, and which is based on and we've got different bandwidths for different levels of executives, and we're looking at it and saying, well, these executives not only in the last 6 months have worked increased hours phenomenally and had larger pressures on them from their boards and from their staff and from their other stakeholders. That how do you remunerate them accordingly? We find that we look at levels between 15 to 30% as an STI. Based around meeting certain criteria, and some of that's a financial criteria, and some of it's certain personal outcomes, and business outcomes, and that we believe that's a strong way of doing it. We don't over remunerate in the salary packaging portion, so the at risk we feel should be reflect what we're doing on the base salary. And then LTIs, fortunately enough, being a listed group, we can use stock for LTIs. And so most of our executives are on a plan of around about 10% of their base salary for LTIs. And that's tied to performance of the business, and it's tied to longevity in the business. So, handcuffing them to the business effectively. So staying for a couple of years, because you need that continuity in your executive team. So hopefully they'll sit within the new ASIC requirements. They certainly sit within the ASX guidelines. So
yeah, and I think too, like over the years, there's been such a shift from a mix of cash and equity, and how much of that's deferred over the sort of short, medium and long-term goals, and really realigning that to the strategic goals of the company and the delivery of shareholder returns. And when you do have those long-term incentive plans, if they're performance rights or performance-based share plans, it really does sort of help the executives have some skin in the game and help shareholders actually make sure that there's the retention of the talent and also the delivery on returns for them as well.
Yes.
I think a bit of the focus for ASIC is the CEO is recommending the execs variable components. They're just saying the CEO should not be in the room when it comes to their element of it, and you should be getting external advice on the CEOs.
Right. Okay. So we got external advice on the executives and the CEO. The CEO was involved in building out the plan for the executives, and our CEO is on a different LTI to the other executives, on the same STIs, but or will be on the same STIs. So we've tried to make sure that we cover all bases.
And how do you manage the performance reviews of your CEO and your exec team? Do you ever outsource those externally?
We haven't in the past. It's probably something we would consider doing. I think there's got to be an element of involvement from the board, absolutely, because they know the business and they know the person in the business. So unless you're very descriptive around what the KPIs are of the CEO, I think it's more challenging to outsource it.
Yeah, and also the board know the level of achievement that they're expecting from the exec team. And I guess if that's communicated early on, there's that sort of, feedback loop there as well to make sure that if they're not adhering to the level of performance that's expected of them, then it's remunerated fairly.
Yes.
How about the performance of the chair?
Yes. Well, we do peer reviews. We've used an online platform to do that on a regular basis. Effectively a yearly basis. We then discuss that obviously as a board. So we do it on the executive team. The executive team on us as board, and the board itself on the board. So we do follow that process.
And how's your board diversity?
It's not gender diverse at present. There's no rhyme or reason for that. We have a very small, flexible board. So we have some. So, for example, Mr. Zhang is very deep in environmental consulting and technology and understands that. We have a gentleman called Mr. Hugh Robertson, who's been in the capital markets for about 40 years. And so very
well known to us all.
Yes, very strong in that area. There's myself, who's mixed background. You heard my background earlier, and then we have another gentleman by the name of Adam Gallagher, who has been involved in finance and technology companies as well. So we've got the diversity is there in the experience of the people. Mm-hmm. It's certainly where we look. We were going to look to recruit another non-executive director just prior to we were starting the process just prior to the current acquisition, and then we put that on hold, and so we'd be likely to start looking at that later in this calendar or financial year.
And have you utilised, I guess, the benefits of a board skills matrix in that regard to sort of make an assessment of the current strategic direction of the business, the current acquisition, and the current skill set of the existing board to work out if there's any gaps there of what you'd like to attract on the board in terms of a specific skill set, specific industry, other sorts of diversity, age, gender, culture, etc.?
Yeah, we haven't yet started that process with just bedding down the acquisition.
Yeah.
Coming out of COVID-19, there's been a focus on that rather than building out our board. But we're very conscious of the fact that we should be using some sort of skills matrix to build out a strong board.
Mm. And how do you find the interaction of the board? Have you ever sort of been in a part of a board that's kind of had a challenging interaction?
Absolutely. Many times. But the board's there to the board members are there to question and provide guidance, and we all don't agree. We have different perspectives, and you generally come to a consensus, though. So on decisions. So I think it's a board's duty to make sure that each board member is heard, and that's the chairman's job, to make sure that everyone has an opportunity to be heard, and as much as you can, equal time. To be heard, and the chair's there to draw out from people what they're really thinking and why they're thinking that way, and then come to a consensus and make a decision on which way you're going to go with it.
Yeah, absolutely, and really sort of challenge and strengthen the proposals coming forth from management.
Yeah, definitely. We have some great robust discussions with all the boards I'm on with the management, and I think that's good for them. They want to be challenged. Actually, they just don't want to be seen because they're can't see the wood for the trees because they're in there operationally. A good management team and a good CEO wants to be challenged on certain areas of the business that they're or the business plan that they're presenting.
You've had quite a bit of experience sitting on boards. In terms of board papers, we know they can be overwhelming. They can be hundreds and hundreds of pages. What do you think's a happy medium in terms of volume?
Well,
depending on the circumstances, obviously, not when you're doing an acquisition, but just generally.
No. Generally. What I've tried to do over the years is set up board meetings effectively on a monthly basis, but look at them quarterly. And so you would look at the first quarter after the end of a financial year is more focused around the financials of the business and getting your reporting right and your auditing right to get those out. So we would focus more around that area. Generally, the January, February, March quarter would be focused more on strategy. And so, therefore, the papers would be a lot less, smaller. Still you're getting your financial reporting, but you'd be working on strategy together and working out the strategy. Then the last quarter, or the March to June quarter, is really on the budgeting and the planning for the business for the next year. So, and then the next quarter, being the July to September quarter, the focus is more on business as usual. How are we going to the budgets that were set? The business plan. Are we on track? Now you're doing that all the time, but there's more focus in those quarters. So I don't think that answers your question about size, but it does matter. It does change dramatically. I think you just got to be very careful that you just don't get too much detail. And that's a job between the chair and the CEO to sit down and talk through that. And then it's a job for the chair to speak to the other directors saying, okay, well, we had 150 pages here. Now, realistically, there was, in your opinion, how many pages did you really think we needed to, and how much detail did we need about that proposition or that request for approval? Look, if you can, I think it's really about the size of the business as well. The bigger the business, I think the bigger the board pack, unfortunately.
So one last question from me. With EVS and EMS coming together, how did that work culturally?
Yeah, well, we've set a new vision, we've set a new mission, we've rebranded slightly, incorporating the EMS logo into the Envirosuite logo. So that's been presented to the whole company, and it's now out there in the market. So now, really, it's the next 6 months is the time will tell whether culturally we've got that right. It's been quite difficult with them not being together and not even being able to get the management teams together to build out that strategy. That's been hard. But I really truly believe that you've got to build a resilient culture these days. It's got to be truly resilient. Who could have seen a pandemic coming, right? So when it's resilient, you need a risk-based approach to that. You need detailed business plans. You need a strong, robust strategy to do that. And I think out of that, you'll build a resilient culture. And culture's they say from top down, but I think it comes from bottom up as well. It comes from your staff loving and being passionate about what you do, or what they do, and what we do for communities and what we do globally for the environment.
Yeah, it's really getting that buy-in to the ultimate purpose and vision of the business, isn't it?
Yes, it is. Yeah,
the alignment between all stakeholders. All right, I think we've come to the end of what we've got time for today. So thank you so much, David, for joining us on Wise Up. It's been really great to hear about the journey that you've had so far, and really excited to follow the journey going forward for EMS and EVS.
Thanks, Ainslie, and thanks, Deb.
Thanks, David.
That's all for today. Until next time, happy podcasting. And remember, if you're enjoying the show, check out our other episodes and all things governance at www.3wiseowls.com.au.